Welcome to The Real in Real Estate, your gateway to the source. I'm so glad you're here. We're all about diving into the nitty-gritty of real estate, sharing insights, tips, and some awesome interviews straight from the industry's beating heart. From the latest trends to cool investment strategies, we've got you covered. Let's explore and uncover all the essential tools and knowledge you need for navigating the ever-evolving world of property and housing. Here we go. Hi, welcome back to The Real in Real Estate. I'm here with Karen Wood again.
Hi.
Hi, Karen. We had her on earlier to talk about different kinds of loans. If you want to know about down payment assistance or anything about a loan, give Karen a call and we'll have her contact information on later. But today we're going to talk about renovation loans. I get asked that question a lot, and not every lender, I don't think even very many lenders will talk about a renovation loan. So that's why Karen's here today, so we can get the facts. So why don't you start off, Karen, by just giving us, what do you consider a renovation loan? How would you classify it?
So a renovation loan is any purchase or refinance where you are financing either the acquisition of the home or refinance of the home and financing any required desired repairs that you want to make to the home, improvements, anything like that. So it's one loan that facilitates all of that in one.
So you can do that at the purchase of the home.
Mm-hmm.
Okay. Can you also do it after you purchase the home? You go, I really can't stand this bathroom anymore. I need to redo it. Can you do a reno loan then?
Yep, you can do a refinance renovation loan. The process is pretty similar. It's the same as it is for a purchase, but it's another option if somebody doesn't want to do like a second home improvement loan, second home improvement loan, or like HELOC or something like that. If it makes more sense to do, sometimes it will make more sense to do a renovation loan because you can go higher on the loan to value than you can
Oh, okay.
with a secondary loan. So yeah, you can do purchase or refinance.
Are there different kinds of renovation loans?
Yes, there are conventional Fannie Mae, Freddie Mac. They have a renovation loan product. And then there's also a government version, the FHA 203K. And there's two different types of 203Ks as well.
How would I know it's probably your job to tell me this, but how would I know which kind of loan I would want? What's the difference between them, or is one better than the other, or does it depend?
So it depends. Part of it would be through the pre-approval process. We'd figure out what loan suits the client's needs best, whether that's an FHA loan or a conventional loan. And it also has a lot to do with the types of repairs, the dollar amount of repairs.
Oh,
So like the FHA 203K limited, that one is for more upgrades, refreshes, slight remodels, nothing structural, smaller repairs. Like if you wanted to renovate a kitchen or,
okay.
do something small, carpet, something like that.
Oh,
Basically anything under 35,000. It can't be anything major. So if you just have a small amount of repairs, we'd probably look at something like that versus the 203K standard and the Fannie Mae version. Those are for more substantial, significant, like room additions, addition of an ADU, structural stuff, complete rework of a house. You find a house and the bones are great, but everything else has got to go. That would be for the 203K standard or for the Fannie Mae programs.
okay. And you mentioned an acronym, ADU. You want to tell everyone what that is?
Oh, I'm sorry. Sorry. ADU is accessory dwelling unit. So like mother-in-law suite or like a game room or something off the house, that sort of a thing. For multi-generational living, a lot of times people want to have like the mother-in-law house or the grandma house again back. So a renovation loan can facilitate the construction of one of those as well.
What about like an apartment above a garage? Would that be the same thing?
Yeah, it would be the Fannie Mae probably or the standard, the 203K standard.
Okay, so we've got three types: the limited, the standard, and the Fannie Mae.
Yes.
Right. Okay. And when can you apply for a reno loan?
Anytime really. I mean, when you're looking to purchase a home, the qualification is exactly the same as it is for a traditional loan. There's nothing different on the credit or income or anything like that side. So all that's the same. That piece is the same. So we basically would do a pre-approval and figure out how much the client qualifies for. And as long as, the purchase price of whatever the house they're looking at, plus the renovation cost is within the parameters of what they qualify for, then they're good to go. The realtor would just write the offer as they would normally. The buyer would get their bid for the construction, and then we'd structure it based off all that, after they go under contract.
So it's one big loan for the
Mhm.
house and the reno, one payment for the client, right?
Yep, yep.
Okay, is there, I'm not sure exactly how to ask this, but let's say I'm buying a house for, I'm just going to use easy numbers, $100,000.
Oh,
And I
gosh.
want to upgrade well, I know, wouldn't that be nice? I want to upgrade the bathroom, say, so I want to add another $5,000 to this. Probably way too low an example, but do you have someone that has to say, well, that's going to price you out of that market. You can't spend that much on a reno loan, or is there any kind of qualification in that respect?
So that goes with part of the pre-qual process. So we would
Okay,
see like, normally when we do a pre-approval, pre-qualification, a lot of times we're looking to see what the max the borrower qualifies for. Just sometimes they just want to know, and sometimes they want to go to their max. Um, so we would just figure out what that top number is. And then typically we'd be looking for a house that was lower priced than that. Um, and then work with the realtor to figure out like what kind of repairs need to be done, what the comps are for the house once it's upgraded,
right,
um, versus the acquisition cost of the house, and then the estimated repair costs, because we're going to go off of, as far as basing the down payment and all that stuff, we're going to go based off of the acquisition cost and the renovation cost combined. The lesser of that, or the final after improved value,
okay,
whichever's so, like, say, for example, in your example, they find $100,000 house with a $5,000 renovation that they want to do. If they've been pre-qualified up to 200,000, then they're fine for
no
that.
problem.
That work, yeah. If they've been approved for 85,000, then we would want to like rework the numbers and tweak and see. But that's kind of something that we have the conversation along the way. Like once we find out that the client's interested in a renovation loan, um, we'll have that qualification and kind of, or that qualification, that conversation, and kind of figure out like what price point the houses they're looking at, how much the renovations are going to cost versus how much the home we think it'll be worth once all the renovations are done. Plug all that in and kind of get a working estimate, so to speak, for what they can start their search based off of,
Okay.
if that makes sense.
Yeah, no, absolutely. Yeah. So I think you just answered my question on how do they qualify. It's pretty much the same qualification process. Am I
Mhm.
correct?
Yep, exactly the same. There's no difference. If you qualify for an FHA loan, purchase loan, then you qualify for an FHA renovation loan. It
Oh,
just has to
cool.
do with the working the numbers.
Okay. And you may have gone through I'm sorry, I've got some notes over here. You may have gone through this already, but
That's notes
how
too.
did, okay. How are the costs calculated?
Okay, so I am gonna have to reference my notes for this
That's
because
fine. We
there's
want
a
the
lot of
facts, so whatever it takes.
yes, there's a lot of acronyms, and I don't want to get them wrong, and I probably will. So, um, there's lingo, there's Reno lingo. The total acquisition cost is the sales price of the house as it is, plus the total renovation cost.
Okay.
The total renovation cost is the cost of the bid, the contractor costs, like the hard cost of the work, plus the soft costs. So the soft costs are things like the contingency reserve, consultant
Oh,
fees, title update fees, stuff like that. And then like I said, the down payment and all of that is based off of the total acquisition cost or the total after improved value. The after improved value we get by having an appraisal done,
mm.
based on the house as it is right now, plus the plans for the renovation. That all goes to the appraiser, and the appraiser says, once this house is finished with these repairs, this is what this house should be worth. That's the after improved value.
Oh,
So
okay.
we take either the total acquisition cost or the total after improved value, whatever number is lower, and then we base everything off of that. So
Okay.
um, it'll be the sales price, and then you add the cost of the bid, and then you add the soft costs, and that's what like the total cost of everything is. And then you figure out what the down payment needs to be off of that. Um, in some instances, depending on what the repairs are, what the after improved value is, we can roll in a lot of the costs. It just depends on where the numbers fall.
Okay. Okay. This just popped into my head. So they're purchasing the house, they've got their reno loan rolled into all of that. Is the money for the reno set aside, or you just go, here, Susie, take this $30,000 and go do what you need to do? Is there a check and
No.
balance?
So
Okay.
all of the funds for the renovation are put in an escrow account. And we have a dedicated renovation department. That's part of what makes our renovation product so great, is that we have the department segregated in such a way that the origination, the processing, and underwriting can focus on the stuff that we do best, which is origination, processing, underwriting, closing, all that stuff. And then the renovation team, they focus on helping get all the renovation stuff vetted and set up and correct. And they also have a dedicated renovation specialist who stays with that loan from processing, closing, post-closing, all that stuff. And they help manage the disbursements from the escrow account to the contractor. It's paid out in different ways depending on the type of loan it is. Like I think with the 203K limited, I think it's two disbursements. I think they get half up front and then half when everything is done.
Mhm.
Um, and with the 203K standard and the Fannie Mae product, there's draws just depending on the size of the
What's
project,
needed with.
project, and then there are inspections that need to be done throughout the process to make sure that the work is being done as it should be.
I was just going to ask, does anybody check to make sure there's work's
Yeah.
being done properly? Because it's your money, your investment as well.
Yes. Yeah. So part of what the renovation team does is they have inspectors go out and they order a final inspection once everything's done. And so they make sure that the work is done according to plan.
Fantastic. Good. That certainly makes sense. Any constraints as to what they can and cannot do or renovate?
Yes, and I am gonna look at my notes again for this just
It's
because.
quite all right. My notes are good. No problem.
So the 203K limited, the max amount that can be, I guess, included in the renovation piece is 35,000, but part of that is soft cost and contingency. And what the contingency reserve is, I know I mentioned it earlier, a contingency reserve is, it's like a buffer reserve for cost
In
overturns
case
or
you go,
price
oh my
adjustments.
gosh, I didn't know that was there.
Yeah, or for like repairs that we didn't know actually needed to be done. Like you see them on the home renovation TV shows all the time where they have that dramatic moment where the contractor calls and it's like, well, we found this and it's gonna cost another $10,000. And they're like, okay, do it, like
Yeah.
that. That's what that's
Yes.
for. So you don't have to pull it out of your pocket. So with that contingency reserve in place, really for the 203K limited, you can do about 31,000
Okay.
in repairs or renovation. It can't be anything major. It can't be really adding anything on like that's not already there. It can repair stuff, but it can't add anything on. So it's just it's smaller stuff. It's really
Okay.
like,
Right.
repair, replace, modernize, upgrade, that sort of thing. Nothing huge.
Right.
For the 203K standard, there is a minimum of $5,000 in eligible improvements. But there's not really a max as long as it stays within the constraints of comparables. I mean, you don't want to do an over improvement,
Right.
the area. So there's not really a max as long as it makes sense for the value of the home or the client has the cash to bring to pay the difference and they acknowledge that they're putting way too
Right.
much in the house, that sort of thing. They can do room additions. You can add a second story. You can do an attached garage or ADU. You can do weatherization, solar and wind. You can add all that stuff
Oh,
to it. So you could add solar panels through
okay.
into okay. You can
Could you
repair.
add a swimming pool?
You cannot add. You can repair or remove, but you cannot
Okay.
add.
Okay.
So that kind of stuff, like the luxury things like that, that's for the Fannie Mae product.
Okay.
So and everything that needs to be with the FHA, it needs to be attached to the house. Like you can't construct a detached garage. It has to stay.
Okay. Okay. That's good to know. I didn't know
Yeah.
that.
So for Fannie Mae, oh, the other things, I'm sorry. So with any FHA, the contractor cannot be a relative or employer. of the
That's
borrower.
good.
Yeah.
That's
So
smart.
it has to be separate. Now for Fannie Mae, they can, but for FHA,
Oh,
they can't. Um, let's see. You can't do any, well, you can't do any structural repairs with a 203K limited. Oh, and with FHA, it has to be a primary residence, but with Fannie Mae, it can be investment or second home.
oh, really?
Yeah. So
Oh,
with the Fannie Mae product as well, you can do ADUs, garages that are detached, not just attached. You can add swimming pool, you can add a spa, you can do all kinds of stuff, adding it says windstorm shelter. Now that we need these in Texas, since everything
yeah.
and everything. Um,
Okay,
uh,
everybody, listen to that.
yeah, we can add windstorm shelters. Yay, it'll be like in Kansas, like the Wizard of Oz.
Toto.
All those, yeah. Um, so basically, really the Fannie Mae product, used the 203K standard as the benchmark. When they were creating their product, Fannie Mae used that, and then they just kind of expanded a little bit and made just a little bit more leniency.
Well, this just popped into my head. Let's say I wanted to buy, because you said investment, I wanted to buy a house, fix it up, sell it, flip it, basically. So I could use one of these loans for that?
Um, I think so. Yeah, I mean, because the thing is, you really have to hold on to it for 6 months.
6 months. Okay.
Yeah, and that's just because that's pretty standard in the industry, when we're not doing, um, just with regular mortgages. Typically,
Yeah,
any officer will tell you you need to hold on to the loan for 6 months, and that
six
has to do
months.
with
Okay.
EPOs, which is early payoff penalty that we get charged as the originators. So as long as they're in the home or hold on to that mortgage for 6 months, I mean, really, you could do whatever. I mean, you could definitely do the Fannie Mae product. I don't see why not, as long as you have it for 6 months. I mean, the um, repairs probably will take a big chunk of that time anyway.
Yeah, yeah.
Um, I mean, I think we have a fix and flip product that we're getting that may be more well suited for
Oh,
that.
well, then you'll have to come back and tell us about that.
Yes, I just found out that we're getting it on a call today. So the call that I was on for this one. So I have to learn about it first. But yeah, I mean, in a pinch, I think this could be used for that. I don't know
Yeah,
if it's ideal for it, but
may not be the best choice, but it's a
yeah,
possibility.
yeah,
So what about interest rates? When you're, are they different than if you're just buying a home and not adding the reno to it?
they
Does that
are a
make it,
smidge higher, like maybe an eighth to a quarter
well,
higher.
that's not too bad.
No, but the good thing is that the renovation loans, they qualify for our rate rebound program, which is awesome. So the
Tell
rate rebound
us.
program, I can't remember if we talked about it last
Well,
time, but
tell us again.
it's essentially free refinances for the next 5 years, as many times as you want. There's no lender costs, so no underwriting, appraisal, credit, anything like that. Plus, we
Really?
give you $1,000 lender credit towards any other third-party costs, like title company fees. So it's not completely free, but it's basically free.
Yeah,
A
very close.
lot cheaper than the
Doing
alternative.
it without you.
Yes. And anybody who is closing loans with us right now is automatically enrolled in this program. Not every single loan qualifies for this program, like loans with down payment assistance typically don't, because we are not technically the lender on those loans.
Right.
Construction loans, like new construction where we're financing the build, they don't, unfortunately, not off the bat anyway. But you could, purchase a home with a rental loan, do the renovations, sit in it for 6 months, however long. And then if when rates drop, you get a free refinance, basically, essentially, free refinance. So I think it's really cool that it qualifies for that, because yeah, the rate's a little bit higher, but once you're in it and everything's done.
It's not that much higher, yeah, then you're happy. You said new construction. Just to clarify, are you talking about buying new construction from a builder or getting land and building your own
Getting
home from
land and
scratch?
building. Yeah,
Okay, that's good to know because not everybody does that either.
yeah, we also do have a dedicated construction loan department. And it's the same with the renovation loans, not to completely derail, but that it allows us to focus on origination, processing, closing, funding, and then the construction
Yeah.
department They handle the construction piece with the contractor, the vetting, making sure that everything is legit and on the up and up. And then that construction person stays with the loan throughout all the draws and everything like that. So they know the person, who they're working with, the contractors and everything, and the borrowers, and they all work together with it. So they make it a really seamless, easy process. And I know the same with renovation loans, I think is true for construction loans. People don't have dedicated departments, or they have to broker these loans out, and they're complicated because as the originator or the processor, you have to handle all of the, game of telephone between the broker and the contractor and the borrower, and you don't really know exactly what it is that they're asking for, and you're asking the contractor for it, and the contractor's like, we don't need that, and you're telling them this, and they're like, we need it, and it's like, it gets really frustrating and
Yeah.
overwhelming. Last company I was at, when we would do renovation loans or construction loans, it was kind of like that, because it was broker relationships and we had to be the intermediary. And even if we weren't sure exactly what something was, it was just a mess. So having these departments takes all of that out, that whole
Wonderful.
entire, like, I don't know exactly what I'm asking for. I don't know exactly what I'm doing, because we have the experts who do.
That's
So
fantastic.
yeah, so it's really awesome, actually, and it's especially awesome that we, have one dedicated person on that team that's your point of contact from start to
Yeah.
finish, and then, you have me or whoever else that you're working with who is your one point of contact, so you don't have like 50 million people in the mix. It like reduces confusion.
Wonderful.
It's a lot easier.
Left hand might know what the right hand is doing.
Exactly. Exactly.
So you have this construction, I'm just going to use the word supervisor, overseer, um,
Oversee. Over.
overseer. Okay. Um, is there
Sorry.
any, like before you do a rental loan, I don't know how far in the process, but does anyone like say, okay, who's your contractor? And you kind of vet them a little bit, or you,
Yeah,
okay,
that's
good.
part of
Because
what the
that's,
renovation specialist
okay,
does.
good.
Yeah. So, the way it would work would be that the realtor would write the offer. And as a side note, renovation loans do need a little bit of a longer closing window because the borrower, they may have their contractor selected and kind of
Mhm.
have like an idea of what they may want to do, but they do need a little bit of time to, after they're under contract, when they know exactly what house they're going to have done, they need to have the contractor come in and get the plans and all that stuff. So that takes a little bit longer. It adds some time to the
Okay,
process.
okay.
So 45 days probably to close on something like this.
Instead of 30, it's not too bad.
Yeah, you definitely want to have a conversation with the seller and say, hey, we're doing a renovation loan. And in a lot of instances, some of these houses, like the seller wants to get rid of them. So they're like, okay, yeah, whatever. It's fine. But you definitely want to have that conversation up front. We're doing a renovation loan. The borrower needs to get bids. So it's going to take maybe 45 days. Just so everybody knows, like, expectations.
Okay,
But you would go under contract, the borrower would have the contractor come out and get the bids done, and then send the bids, the scope of work, all that stuff, the budget, to us, and then we get all that information. There's a packet that they have to fill out. We get all that information to the renovation department, and they help us set up the loan, make sure everything looks right, make sure all the numbers are right, and then while we're doing the underwriting process, that's when they're vetting everything and making sure that all the T's are crossed and the I's are dotted,
fantastic.
that everybody is licensed as they should be, and all that good
And
stuff.
insured.
Yes. Mhm. Yes.
Well, is there anything that we haven't talked to you about so far on renovation loans that you want to bring up or mention or?
Yeah, I'm sure there's a few things. There was something I thought about a second ago that might pop back into my mind, but these loans are really good. I've actually run into, and this is more kind of with the construction loan, I guess, but I've run into a few people over the past year or so who, people are wanting to build things in cash, or they're wanting to make renovations in cash because they don't want to borrow the money and pay the interest.
Uh,
And in these instances, multiple times, people have run out of cash, and then they have been scrambling to try to get loans to help fund the rest of their construction because they have a
right.
built house, and they can't, you can't get a loan in Texas, especially once construction has begun. You can't get a loan if
I did
something is
not know
already
that.
started. Yep. You could maybe get a personal loan. You can get a bunch of credit cards, but you can't get a mortgage. So if you're considering building something from scratch, or buying a home and then funding the renovation in cash because you want to save money, I would strongly urge that somebody to consider instead financing it so that you have all of the ducks in a row. You have your fixed price contract, you have everything
Mm.
vetted, you have a third party who's helping make sure everything stays on track. You've got your contingency reserve built in. And then after it's done, if you want to pay it off, pay it off.
Yeah.
You don't have to keep it, but as an insurance policy,
No,
it's
that's a great idea.
to be prepared and have everything covered and make sure that it can get done and then pay it off. There's no prepayment penalty. You can pay it off when you're done, as long as you wait the 6 months. But that way you don't end up stuck, not
Yes, with a half-built house.
yes. Yeah, I mean, I've met and spoken to multiple people over the past 2 years who have been in this position, and it's like you can't do anything about it now. Hindsight's 2020, and
Yeah.
I wish we had had that conversation, before we started this. And um, so I just want to get that out there. Like I
No.
completely understand not wanting to have debt. I know that rates are higher than we're used to right now, but I think it's just a small price to pay for an insurance policy.
Oh,
I mean, we get
absolutely.
it
I
all
mean,
done.
otherwise you've thrown away your cash because you can't get a loan to finish it.
Yeah, exactly.
Yeah. And rates are higher than they were during the pandemic, but historically they are
No,
not high at all.
no.
It's just they enjoyed the 2.9% as we all did.
I don't know
But
if we'll
it's
ever do
done,
that
it's
again.
over. We got to move on. It's not going to happen again.
Yeah.
You don't want to be a
Uh,
renter for the rest of your life. Take the plunge.
yeah. I mean, and I get it too. The counter argument to that is like, yeah, well, house prices are a lot higher compared, and that's true. But you don't have to buy $1 million house. You don't have
No.
to buy a $750,000 house. I mean, I still firmly believe that buying, I've always said, if you're financially, emotionally, mentally ready to buy, then you should buy, because otherwise, I mean, you're not paying your mortgage, you're paying somebody else. It's somebody's mortgage that you're paying. And yeah, maybe you can't get your
Yeah.
dream home, but maybe you could do a renovation loan and you can make it like a mini dream home. It doesn't have to, the whole idea of starter homes seems to have disappeared in the last, I don't know, 20 years or so.
Yeah.
I have a starter home. I don't ever plan on leaving my starter home.
I'm going to start it and finish it. And there's nothing wrong with that. If you love
And
your home, why move?
yeah, so there, I mean, I think people get caught up in like, oh, like what's the max? What's the max? And it's like, how about what suits my needs? How about what can I live with? What's enough space? What maybe it's not perfect or like shiny and gorgeous, but renovation loan.
There you go.
So I think there's always going to be a counter argument, I guess, for that. Rates
Well,
are high.
exactly. But do you want to build equity? Do you want an investment or do you want to give all of that equity to your landlord?
Yeah.
Think about it.
I mean, and I think part of it, it's part of my retirement plan, actually, with not having a mortgage, living in my house and having my mortgage paid off by the time I retire, if I ever retire. Um, and just having to pay taxes or insurance. I mean, it's either going to help me in my retirement by me not having a housing payment, or it'll help me because I can sell it and get a big
All
chunk of
that
money,
equity.
fund whatever I need to do, or I can rent it out and it'll be an additional income stream. So it's like part of my retirement plan. It's not just like um, I don't just own a home, just own a home, I guess.
Right.
But people don't consider that when they're thinking about like, oh, I'm gonna wait, I'm gonna wait, I'm gonna wait. Well, no, just think in the
Yeah.
future.
And if they go with you, they can within the next 5 years, right?
As many times as you want. You just have to
There you
wait
go.
6 months. So, I mean,
6 months.
really, your finance, what is that? 10 times, right? Yeah, 10 times.
Well, wait 6 months. It takes you 6 months to know what you want anyway.
Yeah.
Well, Karen, we're about to run out of time. So any last words or hints or tips?
Let me just see real quick.
We will have Karen's contact information in the podcast as well, as
Oh,
always.
there was one other thing. Yes. So renovation loans, they are so much bigger, I think, than people give them credit for, because you see homes that are listed in the MLS all the time that say cash only, great investor opportunity. No financing or whatever accepted. But these loans, I mean, these homes can be purchased with a renovation loan because we don't care what the house looks like right now.
Oh,
So it's
wonderful.
adding inventory where there's not inventory. If there's a dilapidated house in an area that you want to be in and the bones are okay, but like it needs a lot of work, that you can now finance that house. So
That'd be
it's taking
fabulous.
all the inventory that's on the MLS. It says cash only, invest great investors, flip and fix, whatever. And it's actually opening doors for people to purchase these homes and live in them.
Fantastic.
So
So Karen, quickly, like I said, we will have your contact information at the end of the podcast, but how would they contact you if they wanted to know more, like right now?
You can call me or text me on my cell phone, which is
Okay,
281-222-5815, or you can email me at karen.wood@nextmortgage.com.
perfect, perfect. Thank you again for coming on the podcast. This is fabulous information because, like I said, not everybody does what you're doing, and I wanted to make sure everyone knew that that was possible and that it's out there. So
Yeah, and
thank
I'm
you.
excited to be back. I feel like I was a little less stressed this time. My chest isn't all right.
Okay, and when you get that other new product you were talking about, you'll come back again.
Flip and fix. Yep, for
Flip and
sure.
fix. We all want to know about that. All right.
Yeah,
Well,
me
thank you so
too.
much. I'm
You're
sorry.
welcome. Thank
Go.
you.
Bye, Karen. Thanks for tuning in to The Real in Real Estate, your gateway to the source. Be sure not to miss our upcoming episodes loaded with fantastic insights, expert tips, and all the latest trends in the property scene. Don't forget to stay connected with us on our Trilogy Realty Group socials: Facebook, Instagram, YouTube, and even TikTok. Until next time, take care.